Hello everyone, well, breaking news. The NFP, the non-farm payroll, raised by 22,000 versus the expectations in August of 75,000. So that is a huge miss. That is a huge miss, okay? And there's a few things that I would like to talk now, especially because after Donald Trump substituting the actual BLS guy, now he's like, I'm gonna show the real numbers, you know, because the latest BLS person that was there is wrong. They were manipulating the data, this and that. Now this guy will do the right data. This guy will show that the economy is actually booming. Well, what can I tell you? 22,000 versus the 75,000 expected. There's actually one good thing is that the previous was actually revised up to 78,000 if I'm not wrong, but that was it, you know, that was literally it. Now there's other few things as well. The average hourly earnings rose to 3.9% in July from 3.8% in June, and that this reading came in above the market expectation of 3.8. Okay, so 0.1% higher, but still it's high. It's better than the 22,000 of, you know, what was the actual numbers. The previous was revised down from 78 to 79,000. With all of that, now there's a few things I wanna mention, and the first one is the Fed watch. Okay, so remember that I've mentioned a couple times already that the NFP would be decisive for what the Fed will be doing onwards. Okay, so remember that into a week ago or something, we had the expectations of a cut for 25 basis point. Well, right now is 100% priced in, basically 90% priced in a cut of 25 basis point. And the reason for this, I say 100% priced in, is because before we had a 25 base points cut or a pause. Now we have a 25 base points cut chance or a 50 base points cut chance. There is 9 days for this to happen, you know, 9 days for the 17th of September, but still, everything can happen, but most likely we will continue to have an expectation of 25 basis point. And it doesn't matter if it's, you know, if the expectation declines a little bit, most likely it's a 25 basis point. Okay, now we go to October. And I don't know if you guys remember, but October was predicted to be no cuts. Now is a 70.7% chance of a 25 base points cut. So we're going to reduce from 425, 450 to 424 to 425. Then in October, there's a 70% chance to decrease into 375 to 4. And then in December, where we're going to be seeing the last meeting of the year, we have another 25 base points priced in of 64.3% to 350 to 375. So now, from now onwards to end of this year, I'm a short, very bearish on the US dollar. Okay, so most likely we will see euro dollar at 120, we will see Aussie dollar at 68 by the end of this year, we will see US dollar Japanese yen down to 138, 142, 140, we will see New Zealand dollar up, we will see GBP US dollar up as well to 132, 131. So there's definitely all of these trades I will be breaking down during the week over the webinars as well, from Tuesday to Thursday, from 4 p.m. to 5 p.m. Sydney time. For you that are not yet subscribed into the Telegram, please go into the description and join the Telegram link. It is there now, because that is what will, this is where I will be sending the webinar link. Okay, so from 4 to 5 p.m. Sydney time, Tuesday, Wednesday and Thursday. Now coming back here, I do believe that euro dollar 120 by end of this year. Okay, it's just a matter of time. It's not a matter of any other circumstances. We see that the Fed is now priced in 75 base points cut by the end of this year, 10th of December. So there's definitely chances of a very weak US dollar from now onwards. Okay, Guys, I hope everyone have a lovely week ahead. Don't forget to subscribe to the channel and join the Telegram. And if you have any questions, bring those questions into the webinar or put it down in the comments and I will make some time to read them. Have a great week and I chat to you soon or see you in the next video. Bye-bye.